Here's how it works. Instead of using rental income to pay for rental property expenses directly, investors first apply that rental income as an extra payment towards their primary residence mortgage.
This is the Saskatchewan Real Estate Podcast.
Hey there, and welcome to the Saskatchewan Real Estate Podcast. This episode is brought to you by Josh Betcher, team lead with Moulin, Betcher & Associates with eXp. I'm your host, Ronald Quaroni. I'm a licensed mortgage broker in both Alberta and Saskatchewan, here to guide you through everything that you need to know about real estate in our incredible province. Before we jump in, I've got a quick favor to ask. If you're loving the content and want to stay ahead of the game in Saskatchewan's real estate market, make sure to subscribe to the channel. Your support helps us keep creating this podcast and sharing valuable insights with listeners like you. And hey, I'm not just here on the podcast. I'm even sharing more updates and tips on behind the scenes content on Instagram and Facebook. Look me up, hit the follow button, and let's connect. Let's get into today's episode. Quick question. Who doesn't love a sexy real estate strategy that seemingly has no downside? If you like this channel, you've probably heard me mention rental cash damming, an incredibly powerful tool to help maximize an existing rental to pay your primary residence mortgage off in record time and help you reduce your tax burden at the end of the year. But let's back up for a second. What if rental cash damming is something you should not partake in? In the next 10 minutes, I'll explain why this strategy might not be a good fit for you. Rental cash damming is a strategy that allows real estate investors to convert non-deductible mortgage debt, like the mortgage on your primary residence, into a tax-deductible investment debt over time. Here's how it works. Instead of using rental income to pay for rental property expenses directly, investors first apply that rental income as an extra payment towards their primary residence mortgage. Since this reduces the mortgage principal, the same amount is then reborrowed from a readvanceable home equity line of credit, or HELOC. This HELOC covers the rental property expenses. This process effectively shifts the mortgage debt from being personal non-deductible to investment-related or tax-deductible. Over time, more of the mortgage interest becomes eligible for tax deductions, lowering the investor's taxable income and generating significant tax refunds that can be used to further accelerate mortgage payoff. The end result, investors pay down their home mortgage faster, reduce their tax burden, and improve cash flow without needing any extra income. Now let's walk through the 5 reasons why you might not be a good fit for this strategy. Number 1, you don't have consistent rental income. If you're a landlord, you already know rental income isn't always predictable. Tenants pay late, units sit vacant, repairs come up unexpectedly. Rental cash damming works because your rental income is cycled through your mortgage to create tax advantages. But if you have inconsistent rental income, you could run into a cash flow issue where you don't have the funds available to keep the strategy moving smoothly. So if your rental property is struggling with frequent vacancies or unreliable rent payments, this strategy might cause more headaches than tax savings. Number 2, you're not comfortable managing debt properly. This strategy requires you to borrow money every single month to cover your rental expenses. Essentially, you're using a line of credit to pay for your mortgage and expenses, and if you don't track it properly, you could end up mismanaging funds. If you're someone who avoids checking your bank statements or doesn't have a solid budget in place, rental cash damming could actually make your finances messier, not better. This strategy requires some hands-on effort, and if you're an investor who just wants to collect rent checks and move on with your day, this might not be for you. Some investors love the idea of maximizing every financial advantage possible, but if you prefer a more passive approach, there are other ways to structure your mortgage that might be a better fit. This is not a set it and forget it strategy, especially at the beginning. It does take some setup and correct procedures to be put in place to make sure the strategy runs effectively. Number 3 on the list is one of the most important, and we'll explore it right after this quick break. Real estate investing does not have to be a full-time job. Randall, Hoeber, and Boys Group Realty provide complete property management services in Yorkton and surrounding areas, allowing investors to enjoy passive income without the headaches of day-to-day management. From finding tenants to handling maintenance and rent collection, Whether you own a property or are just getting started in the market, Randall Hoeber and Boys Group Realty makes it simple. Call Randall Hoeber at 306-782-1323 or email info@ralixenterprises.com to take the next step towards hands-free real estate investing. Your property, our expertise. Whether it's your home, business, or farm, Pioneer Solar and Renewables has you covered. As leaders in residential, commercial, and agriculture solar solutions, they make clean energy easy and affordable. Visit pioneersolarenergy.com or give them a call to begin harnessing the power of the sun today. Are you investing in real estate? Let Krishna with Boys Group Realty take care of everything. Finding properties, purchasing, renovations, leasing, and management, leaving you to focus on building wealth. Whether it's a single rental or an entire portfolio, serving Saskatchewan and surrounding areas, helping maximize cash flows and minimize stress. If you're looking for an expert to manage your investments, reach out today, home@meetkrishna.ca. Going through the 5 reasons not to rental cash dam, and here's number 3. You plan to sell your property in the near future. Another major reason to reconsider cash damming is if you're planning to sell your property in the next few years. Why? Because this strategy works best when you run it long term. The real benefits like mortgage interest reductions and tax savings compound over time. If you sell too soon, you won't have built up enough tax advantage to really see the payoff. So if you're looking for a quick exit from real estate, this probably isn't the strategy to bet on. Number 4, you're not comfortable with CRA scrutiny. While rental cash damming is 100% legal, it does require good record keeping to show our friends at the CRA that the funds have been used for your rental business and they are being well tracked and not commingled with other debts. The Canada Revenue Agency may ask for proof that borrowed funds were actually used for investment purposes. If you haven't kept clear records like bank statements and transaction logs, you could find yourself in an uncomfortable situation during tax season. Now, if you're organized and meticulous, this isn't a problem, but if the thought of dealing with a potential CRA audit makes you sweat, you might want to think twice before giving this strategy a look. And lastly, number 5, rising interest rates could reduce the strategy's effectiveness. Interest rates have been all over the place in recent years. Rental cash damming works best when borrowing costs are relatively stable because the strategy relies on holding large balances on a home equity line of credit. You could find yourself in a rising rate environment with a very large debt servicing cost. This increase in debt servicing cost can outweigh the financial benefits. This is also why regular check-ins on your plan are really crucial as you work with someone who can help address these issues as they arise. And that's it, the 5 reasons why cash damming might not be for you. Like any financing tool, it works best when used in the right situation. If you have steady rental income, a solid mortgage structure, and the discipline to track your finances, this could be a game changer. I'll also point out that a number of these 5 issues that can pop up could easily be solved by working with a cash damming specialist who can guide you through the process. Implementation is key, and it is a service that I offer. If you'd like to book a free cash damming consultation, my link is in the bottom of the episode below. If you missed my first video about rental cash damming, I've left a link in the description of the episode. Please watch and let me know if you're ready to dive in. The Saskatchewan Realtors Association supports over 1,700 realtors across the province. Their members provide expert insights to help you navigate the market. Visit sra.ca for monthly stats, industry updates, and to find a realtor near you. Thanks for tuning in to the Saskatchewan Real Estate Podcast. Don't be a stranger. Whether you're buying your first home, refinancing, or investing in real estate, I'm here to help you navigate the mortgage process in both Saskatchewan and Alberta. Use the booking link below to schedule a time to chat. If you found this episode helpful, don't forget to hit the subscribe button so you never miss a valuable piece of real estate information. Until next week, I'm Ron Quaroni, your Saskatchewan mortgage professional. Bye for now.